Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after seeing at least 5 attempts at the level of 67.65, the market is backed away once again and now holds to a relatively consolidated pattern as eyes look now to this Tuesday's Reserve Bank of Australia's RBA board meeting and the official cash rate announcement. The RBA is expected to lift the cash rate by 25 basis points from 3.35% to 3.60%. While global markets will also be keen to see what US Federal Reserve Jerome Powell has to say about inflation and rate hikes when he testifies before two committees this week. Looking at the technical pattern, we can see now that the market is somewhat still consolidating in a range somewhere around 67.25 to 67.65, and I don't feel the market will break out any such range until the RBA's announcement. It could be a little bit more to the dovish side from the statement, I feel, and therefore could see a slightly weaker pattern coming through. However, towards the base around 66.50-70 should be, or maybe, a place where the bulls will ambush any weak or any attempt to take on that level and maybe see a rebound from there. With investors now cautious ahead of this week's semi-annual testimony on Capitol Hill from the US Federal Reserve Chairman Jerome Powell, the market will also be closely watching the US job report on Friday. Chair Powell will testify before Congress for 2 days, beginning on Tuesday, as I mentioned, which could offer clues when he discusses the bank's latest semi-annual monetary policy report. Looking ahead, Friday's February non-farm payrolls report is expected to show around 224,000 jobs were created that month, with a slowdown in job growth from January's unexpected strong reading that showed 517,000 jobs were added, while the unemployment rate is expected to remain steady at 3.4%, the lowest since 1969. Beside the Friday's job report, upcoming releases on inflation across the economy will likely also carry a lot of weight on the bank's decision. When the US Federal Open Market Committee, or the FOMC, meets, it's likely they won't change their hawkish stance anytime soon. Therefore, a 25 basis point rate hike is expected when they meet on March 21st, 22nd, and the statement will be the most important role in what comes out, in whether or not they are looking for any further hikes, with this year so far holding 325 basis points. So with the dollar index slightly weaker over the last 24 hours, slipping from 104.50 to 104.22, the euro has found further encouragement, and as the bulls take the journey higher and now look towards the region of 107.0515, a little caution here, as the market did find good supply. And looking back on history, I feel that we may again see from the beginning of February that there was a lot of rejections from that region. So therefore, towards 107, as I mentioned, 0515 could see a retreat. The base at this stage still holds around 105.2025. The dollar yen, well, the market was a little bit apprehensive in taking the market higher, but backed away from that topside resistance somewhere around 136.80 from the late last week, and now currently trading just under 136. The market is most probably going to find support, I feel, close to the lower side of 135. Overall, we're now out of the overbought zone, which gives a lot of room there for the bulls to take the market higher. If the dollar index does rebound, which I feel it will, and hold to its upside target around 106, which is about 180 points higher, then this should see dollar yen rally on towards its objective around 137, and even stretching further in a broader or primary outlook to 139 to 142. The sterling, well, the market still holds to its gains since rebounding late last week from the lows of 119. I feel that there may be a little bit of weakness coming into play due to the lackluster technicals from the RSI and the MACD. So I'm not ruling out at this stage another challenge back to 119.30.35, with any advancement views of resistance, that is, from 120.70.75 to 121. Gold, well, the market was a little bit hesitant in taking the challenge higher and backing way clearly from the 1,856, now puts the focus back on 1,838. A clear break there would give further indication to the correction that we're seeing, and maybe even see a fall back towards the lows of 1,800 and a base holding at 1,786 to 89. And wrap it up with oil. The bulls are still taking the market higher and looks clearly now towards the target of 82.2050. I'll be a little bit cautious there. We are overbought and therefore could see a rejection like we saw back here in January, and therefore a retreat from 82 and look back towards 78 or even down to 75.50, 70. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the day.